Great to have you with us. Thanks for joining us on Business Morning. I am BC Adebayo. We start off with oil prices this morning, which are lower due to oversupply concerns as OPEC and its allies wind back production cuts in August, and a rise in worldwide COVID-19 cases points to a slower pickup in fuel demand. Brent crude futures stood 0.6% to $43.26 a barrel earlier on, and U.S. WTI crude futures were down 0.7% at $39.99 a barrel. Well, Brent has posted a fourth month of gains in July, and U.S. crude posted a third, as both rose from depths hit in April when much of the world was in lockdown due to the coronavirus pandemic. But analysts say that investors are worried about oversupply as the OPEC Plus is due to start reducing production cuts this month, and a recovery in oil prices from record lows is likely to encourage U.S. shale producers to ramp up output. Meantime, oil output by OPEC rose by over 1 million barrels a day in July, as Saudi Arabia and other Gulf members ended their voluntary extra supply curbs on top of an OPEC-led deal. And back home, Seplat Petroleum Development Company has marked its 10th anniversary in Lagos with an inaugural energy summit aimed at discussing business sustainability and energy transition. The event, which had most participants via an online platform, also witnessed the handover of the company pioneer CEO, Mr. Austin Avuru, to Mr. Roger Brown. Let's see the report.
A summit, an energy summit, is launched here today.
Rather than pop some wines, hold some colorful assembled reception and lavish ceremony, Seplat PLC, arguably Nigeria's most successful indigenous oil and gas company, is hosting this inaugural energy summit to celebrate its 10th anniversary.
To do this business and remain relevant and sustainable for the long term, we have to do it in such a way that the fossil fuel will be done in a cleaner way, and that's why the Seplat gas story is key. It's also very important for us to appreciate the impact of what the climate narrative is now doing to our business.
Themed Business Sustainability and Strategic Leadership in Africa, Seplat intends to add their voice through the business community globally, participate and contribute to the climate change narrative, environment safety and governance initiative in the business world. It's about global energy transition, climate change, global energy market, post-COVID, low crude oil production costs, corporate governance, renewable energy. The robust panelists scattered across the globe made spot-on contributions.
Fiscal sustainability in Africa will increase and improve. They'll be positive for growth and wide acceptance of cleaner energy and renewable energy sources.
Part of the anniversary event is the handing over of baton from Austin Avuru, the outgoing CEO, to Roger Brown, the new CEO. He shows us part of the strengths of the company's success.
We really didn't have anything to learn from or copy from. We're not operating in an environment where you already see a lot of corporates where governance is taken for granted. So every time we looked over our shoulders, we're not seeing anybody to copy from. So we had to build internally and build all on our own and set examples and set the pace and set milestones for ourselves.
From 7 years on the saddle as the CFO, Roger now wears the cap. He will simply sustain the culture.
Please continue to support us through partnerships, through our 8 joint ventures we have, joint venture in ANO in the gas side, and give us your support in completing transactions and approvals and legislation that's very clear.
Among the consensus here is that sustainability will make you a darling to investors. Also, ensuring that the current energy mix is rejigged for a greater lean to renewables for an efficient energy transition. Olu Phillips, Channels Television News.
And more headlines as Lagos Chamber of Commerce and Industry has asked the federal government and the Minister of Communications and Digital Economy to address some issues in the 2020 Nigerian Postal Service regulations for the courier industry. According to the LCCI, a framework in which NIPOST is both a regulator and operator is detrimental to the development of the courier business in the country. The LCCI says the guideline, which prescribes what an operator of courier and logistics services will contribute a sum equal to 2% of its total annual revenue to the Postal Fund, should be expunged in the interest of investments and investors in the courier and logistics sector of the Nigerian economy. Lately, the federal government has been revving up its tax revenue mobilization in a bid to broaden the tax net and boost revenue into its coffers. One of the latest strategies is the reinforcement of the rules and regulations guiding the implementation of stamp duty across the various sectors of the economy and the ongoing execution of the road infrastructure development and refurbishment investment tax credit scheme in line with Executive Order 7. But how well can the government achieve its tax revenue mobilization and strengthen compliance among Nigerians? But this and more will be the conversation today on the program as an Associate Director of Anderson Tax Nigeria, Michael Ango, joins us now. Good morning, Mr. Ango. Thanks for joining us on the program. The Nigeria's tax to GDP ratio has been 6% for some time now, but considering the 10.4% increase in collection rate to 1.11 trillion naira, which we saw in the first quarter of the year, can we say there's been some improvement?
Oh, yes, definitely. Good morning. I think the first thing you have to do when you are assessing tax collection is to ask yourself, in terms of what is available, what is the quantum of what is being collected? One of the challenges that we've had in Nigeria over time, which is the reason for our comparatively low tax to GDP ratio, is that we've not adequately taxed, the large population and, of course, the GDP that we have. At the time, we had a GDP of close to 500 billion United States dollars. And so in relation to that, there was this perception that our tax collections were not reflective of the potential within the Nigerian economy. Yes, we've had the increment of VAT from 5 to 7.5% in the last 6 months. We've also had FIRS, the federal government, ramping up, as you say, its tax collection efforts with the focus on stamp duty and all of that. So yes, there has been some improvement, but until we have the full picture, I think let's allow for the whole year to happen, and then we'll know whether our tax to GDP ratio has improved. But certainly, I think even for the conversations that are going on, you can feel that there's a renewed buzz concerning tax collection. What is important, of course, is to do it in a very focused manner and in a way that you ensure that you don't overburden people, but then again, everyone pays his or her fair share of taxes for the development of the Nigerian economy.
Now, the government has just reintroduced a full-fledged implementation of the stamp duty and reenacted some seemingly extinct parts of the act, like the 6% stamp duty on personal and official rents. What do tax administrators like you make of this development?
Okay, I think, honestly, for me, the first thing we have to ask ourselves is what is the place of the Stamp Duty Act, as it were, in tax administration in Nigeria? And I'm saying that given the provenance of the act. It's a very old act. And if you look at the historical basis for which stamp duty was imposed in Nigeria, it was essentially introduced by the British while they were here because there needed to be some authenticity given to certain documents and certain transactions. So while the stamp duty, has its usefulness and its purposes, I think the current Stamp Duty Act that we have in Nigeria is not one that I think can really achieve what we wanted to achieve. And I say this with all due respect to the efforts that the FIRS is currently making with respect to administering the act. They've done some good work. There were some amendments in the Finance Act 2019, cosmetic amendments, if you ask me, because they do not go far enough. So what I will say is that, yes, it's a law, it exists, it's in our books, we need to implement it now. But for me, where I would like to see FIRS again put some efforts is actually in doing a wholesale amendment of the Stamp Duty Act in order to make it an act that can be implemented in 21st century Nigeria. Yes, there have been some amendments, particularly with respect to electronic stamping of documents, payment of stamp duty on electronic transactions, of course, clarity on the taxing powers between the federal and state governments, as it were. But I don't feel that the amendments that were made in the Finance Act 2019 go far enough. But having said that, it is an existing law in Nigeria. It has to be implemented. And I can say that I commend FIRS for bringing stamp duty back into, national consciousness. Everyone is talking about stamp duty. The next step then is to say, how do you implement this act in a manner that everyone understands, the layman on the street understands what stamp duty. For the large corporates, it's always been there. I think there's been some level of compliance. But for, I think, you and I, the individuals, there needs to be more enlightenment. People need to understand what the essence of the act is. And then, of course,
All right, we'll get back to the conversation with Mike Ango in just a moment, but let's just remind you of the latest developments in the crude oil market. Of course, we saw prices down this morning, and that was caused by oversupply concerns as OPEC and its allies wind back production cuts in August. And we've seen a rise in worldwide COVID-19 cases, which is actually pointing to a slower pickup in fuel demand. Brent crude slipped 0.6% to $43.26 a barrel, and U.S. crude futures were also down 0.7% at $39.99 a barrel earlier. Analysts say that investors are actually worried about oversupply as OPEC Plus is due to start reducing production cuts this month, and a recovery in oil prices from record lows is likely to encourage U.S. shale producers to ramp up output. Meantime, oil output by OPEC rose by over 1 million barrels a day in July. And that came as Saudi Arabia and other Gulf members extended their voluntary extra supply curbs on top of an OPEC-led deal. All right, let's get back to the conversation with Michael Ango, the Associate Director of Anderson Tax Nigeria. All right, now let's continue the conversation. Now, of course, now that Nigerians will be seeing more emphasis on taxation from the federal government, how well can the government stimulate collaboration with taxpayers to boost their tax morale for improved revenue?
I think the simple thing is that let the input reflect the output. What the average Nigerian wants to see is that when we pay taxes, we want to see that our taxes are being used for the common good. If you go to the countries that have a very high tax compliance rate, the Nordic countries, you go to Norway, you go to Sweden, etc., you'll see that social services there are easily available. People can tap into government services and all of that. So people have a sense of ownership. People believe that if you pay taxes, then you can benefit from your taxes. You can easily access healthcare, you can access social welfare, housing, and all of that. So I think that is one area where government needs to do its own bit. Having said that, that does not excuse, of course, the low compliance rate amongst the Nigerian populace. There are many reasons for that. Some have said the long years of military rule have eroded this feeling of patriotism and nationalism and all of that. But again, the reality is that people respond to what they see. So if you have very good roads to your house, if you have efficient rail services, if you can access healthcare at very moderate cost, subsidized or not by the federal government, it is likely that when it's time to pay your taxes, you will not feel as if you're being shortchanged. But where the average Nigerian pays taxes and doesn't feel that he or she is getting anything back from government, then it also, it affects your ability to pay. Of course, we mustn't always blame the federal government. The state governments also have a role to play in this. Most Nigerians, all Nigerians live in a state, other than those who live in the FCT. So the state governments also have their own role to play. The general perception is that only persons who are in employment, for example, pay personal income taxes, and then only the big corporates are taxed and all of that. So there's a feeling that there isn't, equality in that sense, like everyone is not contributing into the common purse. So there's a lot of work to be done. Again, I must say that I commend this current government for its focus on taxation in the last 4 or 5 years, as we've seen, but more work needs to be done. People need to feel the impact of governance right into their homes. And I'm sure that if years, we'll see that, Nigerians will comply and will have much higher compliance rates than we currently do.
All right, still talking about tax compliance now, of course. In the process of wanting to achieve informal sector taxes, what can be done to avoid overburdening the average trader or shop owners with a multiplicity of taxes from local government to the state and the federal levels?
Yes, very, very good. And this is an issue that has been a life issue. I used to work at the FIRS, and these are issues that we try to tackle while we're there. The issue of multiplicity of taxes, again, is something that is spread across the entire country. But it's a function of two things. One, it's a function of lack of knowledge about the tax laws and what the obligations under the tax laws. And then, of course, the second is the political will to ensure that tax laws are applied as they should be. So what you have essentially is that our tax laws have a range of taxes that should be collected by different levels of government. The federal government has its taxing powers, the state governments and the local governments have their taxing powers. But then what you find out is that one or two levels of government then decide to go outside what their taxing powers are and begin to tax transactions, incomes that should ordinarily not be taxed by them. So I can use an example for, interstate travel in Nigeria. You find that if you're traveling from point A to B in Nigeria, probably a commercial vehicle or you're transporting goods, you'll find that at each stage, depending on where you're traveling to, you will get taxed. And these taxes are not official. They might give you a receipt, but nobody knows where these taxes are going to. So I think what has to happen first, let us have some clarity with respect to who can tax what and how those taxes should be paid. My preference, and I think the preference of anyone who is involved in tax administration, is that all tax payments should be done, through financial institutions. They should be done electronically. The idea of people paying taxes in cash in the 21st century really shouldn't be happening. I know that a lot of effort, again, has been put in place in creating multiple payment platforms so that you and I can pay your taxes in the comfort of your homes. But the reality is that is only one thing. The next thing then is that if people decide to go outside the remit of the laws, then those people should be punished. People just wake up in the morning and put, some logs of wood on the road and then stop vehicles and ask them to pay taxes. These things happen in broad daylight in Nigeria. So a lot needs to be done. I know that the JTB, the Joint Tax Board, has issued several notices. They've said, people should stop collecting taxes. The laws also prohibit putting up checkpoints to collect taxes. But it goes even deeper than that. So you find that businesses are generally subject to all sorts of levies, whether in the states or in the local governments. And it's a very big disincentive to business. So you find out people have to pay all sorts of sewage fees, environmental fees, and it really becomes, it gets to a stage when businesses then begin to ask themselves whether they need to operate within a particular environment or not. So I think we must change our mindset and our attitude towards taxation. And I'm talking exactly specifically to the government now. Those businesses are there for a purpose. They are there to boost the economy. If you tax them to death, they will disappear. So one other thing that needs to be done, again, is for communities where businesses are also cited to understand that if you take out all the revenue that businesses make in form of levies and taxes, then there will be absolutely nothing to plow back into the communities. Again, like I said, some of these problems are not problems that will be solved by the stroke of a pen, but it will entail there will need to be engagement at all levels. Maybe the federal government should continue to take the lead in terms of talking to the state governments and the local governments in terms of how to curb this issue of multiple taxation. And we must also realize that these are some of the indices that are taken into consideration when, for example, Nigeria is being ranked on the ease of doing business and ease of paying taxes. So it's something that is not just local or internal, it's also something that has some international consequence for us in terms of how we're perceived in the international community.
We would like to thank you, Associate Director of Anderson Tax Nigeria, Michael Ango, for speaking with us on Business Morning.
Thank you very much.
Nigeria's electricity roadmap will be our focus when we return in just a moment. Please stay with us. Welcome back. The federal government last week approved the commencement of pre-engineering works on the expansion of Nigeria's electricity transmission and distribution network, as well as its generation capacity by global technology powerhouse Siemens Nigeria. The pre-engineering contract forms the initial step in the Presidential Power Initiative outlined by Siemens and the federal government in July 2019. Now, the PPI project aims to upgrade the electricity network to achieve operational capacity of 25,000 megawatts from the current average of around 4,500 megawatts through a series of projects spanning 3 phases. But joining us now to analyze this project and its implications for businesses and the economy at large is the chairman of the Manufacturers Association of Nigeria Power Development Company, Engineer Ibrahim Usman. Good morning. Thank you for joining us on the program. Well, let's begin the conversation with you talking us through the history of the Presidential Power Initiative and how Siemens got involved in the project, considering that there was no open bid from the federal government.
Well, first of all, thank you very much for having me on this program. As you are all aware, or as we are all aware, electricity is key to development. In fact, there is no economy which will develop without having adequate electricity, because all developmental initiatives must have power as a foundation. So I'm glad you people are taking up this seriously. You will recall the president of Germany visited Nigeria about a year and a half ago, and I think that was the time that this thing came up. And it is a good initiative by the federal government. However, whatever one is doing, if the foundation is not right, it will not work out. It's like taking a building. If you are making a building and you find that the foundation is shaky, then the building will collapse. It will never stand. And this is our fear with the Siemens Nigerian deal. We fear because, as you are aware, TCN had actually initiated a 25-year, or is it 20-year program, which was actually prepared by a German firm. Very beautiful transmission and grid rehabilitation, as well as expansion program. One would have expected that if Siemens is coming in, there would have been some synergistic approach or meetings between TCN, the Nigerian Electricity NEC, Nigerian Electricity Regulatory Commission, and all other key stakeholders like the DISCOs and the GENCOs before a decision is taken. Secondly, we mustn't forget that Nigeria has gone very far in terms of even the manufacture and production of key essential equipment like transformers, like cables, like meters, which are all essential for the success of the Nigerian electricity supply industry. But with the program or with the deal signed with Siemens, I'm not sure there had been discussions based on the local content, because local content is very, very important. President Buhari's program has the idea of creating jobs. And in this electric sector industry, it's not just creating of jobs, but creation of essential jobs and transfer of technology. One would have thought also that the deal would involve the local manufacturers, especially those that are producing transformers, as I said earlier, and all other essential equipment for the industry. Also, it would have been very smooth if there had been earlier discussions with the key stakeholders. But as far as we know, I don't think there had been such. Most importantly, the Nigerian electricity supply industry is supposed to be overseen or guided by a regulator, which is the Nigerian Electricity Regulatory Commission. Now, in Nigeria, it would appear that that commission is just a toothless bulldog. I say it is toothless bulldog because, again, they were not taken into confidence. I believe maybe the Minister of Power should have been taken, but even the Minister of Power shouldn't impose himself or its ideas on NAC.
But are you sure? Are you sure this is actually the case here?
I'm not very sure. But what I do know, because I am aware that there had been a lot of complaints, in particular by key stakeholders, even the discourse themselves that are supposed to be assisted, because the basic concept is for the for Siemens to assist our discourse in making and creating a robust distribution network within their systems. But even them, this cannot be done, for example, if there hadn't been some groundwork done on what do they really require, what are their priorities, what are the things that they needed to do, how much will it cost. This issue is something that at the end of the day, it may be just a work in progress. The reason I say that is there is need for even budgeting to know how much is involved. These things could not have been done the way we had this the announcement being made, because there would have been some prior discussions, as I said earlier, between all the key stakeholders, especially those who are going to be assisted, the discourse, for example, and the transmission company, because there must be a synergy in terms of the transmission network itself. You are very aware that one of the biggest challenges we have today is that of transmission. The generation is there, but if we cannot move, we have stranded power, over 3,000 megawatts now of stranded power. It used to be about 2,000, now it's about 3,000 stranded electricity. And we are crying, especially the manufacturers. We are crying because we cannot produce our goods and make our goods competitive with the kind of electricity. All of us are self-generated. Right now, we self-generate up to 13,000 megawatts of electricity. There is no manufacturer, no serious manufacturer is there without having his own electricity supply equipment in place, like the generators.
Now, talking about electricity supply now, with the timeline for the 3 phases of the project, how soon do you think that Nigerians can start expecting reliable power supply?
I don't see it happening soon. I don't see it happening soon. The reason is very simple. Electricity supply, you have to look at the whole value chain. You have to look at the gas supply, for example, to the GenCos. The GenCos are complaining bitterly because they are not being paid what they are supposed to be paid. The gas producers also are complaining that look, we have to be paid the economic price for the gas we are supplying to the GenCos. Otherwise, we will not supply. The GenCos now produce the electricity, and the discos reject. A lot of the discos reject because they don't have a robust distribution network that will take whatever is supplied to them, and they are scared that if any electricity that they take, they must pay for. And if they must pay for that, they will say, I would rather not take it, because if I take, for example, 500 megawatts and I am only able to give to my customers 300 megawatts, that means I have 200 megawatts that I have to pay for. Yet I haven't consumed it. Yet I haven't been paid for it. So in electricity supply chain, you must look at the whole value chain, and there must be a very, very smooth transition from the point of the gas generation to the electricity generation itself, to the transmission company which distributes, and then finally to the discourse.
All right, Engineer Usman, when you look at the initiative as a whole now, tell us, what do you think that industrial participants like you will benefit from the project implementation?
No, the project implementation is very good. The initiative itself, I said earlier, is good. The only thing is, as usual with Nigeria, is just that they didn't follow the procedure properly to ensure that a lot of planning goes into it. If the correct planning had gone into it, we will all benefit, because then what would have been done is we'll look at all the limitations of the discourse. and Siemens then can provide the equipment and the technical know-how for those. But when I talk of providing here, I'm not expecting Siemens to just bring all their equipment from Germany. No, in that case, they are going to destroy the manufacturing industry in Nigeria, because we already have industries in Nigeria that are producing, for example, transformers. We have industries in Nigeria that are producing cables. We have industries in Nigeria that are producing meters. So we don't expect Siemens to bring all those things from Germany. But I'm not too sure whether these things have been captured properly in the agreement itself. So theoretically, it's a very good program, but it's the implementation and the way it was introduced that we have complaints with.
Now, beyond realizing 25 megawatts of power in the long run, tell us what would be the other benefits of the Presidential Power Initiative for Nigerians, the local economy in the medium to long term.
Well, fantastic, because if we're able to get that, that means our electricity needs will be taken, prices of, because once there's adequate electricity, that means we manufacturers, for example, will be able to produce our goods at competitive prices. Elsewhere, electricity takes only about maximum 10% of production cost. In Nigeria, sometimes our electricity consumes as much as 40% of our production cost. So we cannot be competitive. And don't forget, the African Continental Free Trade Agreement is already taken off. And if it is taken off, what does that mean? That means we are now going to compete with other African countries, our goods and services. In particular, in terms of goods, we have to have electricity at good price so that we can be able to produce our items at competitive prices. Countries like Egypt and South Africa will be competing with us.
All right. All right, the chairman of the manufacturers.
Yeah.
All right, you can just go ahead if you can make it in 30 seconds.
Yeah. All I wanted to say is that the initiative is very good. The only thing is that quickly the government, my suggestion that the government has to ensure that we sit down. Local content must be taken care of seriously. The transfer of technology must be taken care of seriously. Nigeria Electricity Regulatory Commission is not supposed to be just a toothless bulldog. It must be given its adequate powers. And if it doesn't have, then I will suggest seriously that they have to go to the National Assembly with with request to ensure that now they are strengthened in such a way that they will be the key drivers. Don't forget, our ministries are just filled up with civil servants. Civil servants, and especially in a sector which is technical like electricity, they don't know much. So whatever decision the civil servants take in the ministry may be the wrong decisions unless they liaise appropriately with all the technical areas.
I'm afraid we would have to wrap up this conversation at this point, but would like to thank you, Chairman of the Manufacturers Association of Nigeria Power Development Company, Engineer Ibrahim Usman, for speaking with us on the program this morning.
Thank you very much. Thank you.
And let's get a review of last week's equities market performance with Eddie Young-Ewan. Good morning, Eddie.
Good morning, BC. Well, it was a short trading week last week as the market opened for just 3 days due to the Eid holidays. Now, although it was short, the market closed the week positive by 1.09% to 24,693.73 points, while the equity cap rose to 12.882 trillion naira. A total turnover of 421.98 million shares worth 5.33 billion naira were traded in 11,800 deals. Now, the financial services industry measured by volume led the activity chart with 249.588 million shares valued at 1.56 billion naira. And that contributed about 59% and 29% to the total equity turnover, volume and value, respectively. The sectors were mixed last week, but broad market performance was supported by names in the industrial goods and banking counters as both topped the chart. Banking index was up 3.03%, while industrial goods was up 3.63%. However, consumer goods and oil and gas declined while insurance was unchanged. Well, joining me now to talk more about the market is Phil Anegbe, a research analyst at Cardinal Stone Securities. Good morning, Phil. Thank you for joining us on the program.
Yeah, good morning. Thank you for having me.
It was a short trading week last week, although it ended positive. But what is your outlook for this week?
Well, for this week, we expect the market performance to be broadly mixed. you expect investors to react to the release of Q2 results. A number of results came in last week. Some came in very late. And broadly, the results, we saw very weak results, especially across the consumer goods space, with the exception of Dangote Sugar. Dangote Sugar reported strong results, grew PAT by over 30%. We saw some strong results in the oil palm sector / rubber sector, where Okomo and Presco played. So they reported very decent results on the back of strong output, better CPO prices, and border restrictions. For a couple of the banks, we saw FCMB and FBNH report decent results, but the others were basically weighed down by impairment losses. So broadly, you expect investors to react to these results. So you expect mixed sentiment and reactions to declarations of dividends. Talking about what MTN they declared the dividend of about 350 kobo. There will be some reactions to that as well. So mixed reactions from investors expected this week.
Okay, talking about earnings now, Boa Cement has released its unaudited half-year financials showing a jump in revenue and profit after tax. Is that likely to attract investors to the stock today?
Yes, the cement producers have surprised the market in this quarter because a number of people expected a slowdown in output, but that did not materialize. A number of them have surprised investors. And you expect reactions to Boa Cement results. You recall that with a decent performance from WAPCO and Dangsem, we saw markets react to pick up those stocks, those names. So you expect a similar reaction for Boa Cement, given the good results that we just published as well.
Now, speaking about Dangote Cement and Lafarge WAPCO, I mean, these three cement makers, including Boa Cement, have released their earnings. How would you say that these companies have performed so far?
I think they've performed relatively well. A number of analysts had expected that their performance would be a bit weighed down because of the coronavirus impact on economic activity, but that did not necessarily play out, even though we did see revenue decline for WAPCO and Dangsem. But a combination of operating cost efficiency as well as tax concessions helped to actually take them over the line. So they reported decent results. Boa Cement, also on the back of strong volume growth, is also reporting decent results. For Boa Cement, it's more of the gains we are seeing from its expansion efforts in the previous year that continues to cascade to earnings. So really good results from the cement players, and of course, a very favorable operating environment backed by government's desire to actually encourage or continue to encourage domestic production of cement is still doing a number of the firms really good, and they continue to report decent results.
All right, thank you, Phil, for your input on the program. Phil Anigbe is a research analyst at Cardinal Stone Securities. I guess we'll leave you here for a moment now. Over to you, BC.
All right, Edith Young, we'll be coming back to you just in a moment to review the debt and currencies markets. Plus, we'll see what market headlines are making the rounds this morning in the UK. Please stay with us. Juliana Olayinka is ready to tell us what headlines are driving the markets in the UK this morning. Good morning, Juliana. Tell us how the week has started in the City of London as the government encourages workers to go back to their desks and as its discounted meal deal begins.
Good morning, Bissy. Well, a couple of weeks ago, Prime Minister Boris Johnson said that the 1st of August, which was Saturday, would be a day that he would be encouraging employers to start asking their staff to come back to work. Before then, he was asking people to work from home if they could. But so much has happened since that time. In Greater Manchester, a state of emergency has been declared, or not a state of emergency, a major incident has been declared because of the surge in COVID-19 incidents. On Friday, there was an emergency press briefing. Prime Minister Boris Johnson stood next to the Chief Medical Officer for England, Chris Whitty, and they put a halt on any further lockdown easing. So the situation has really changed, and it does appear as if some corporate giants are taking matters into their own hands. Tech giants like Google and Facebook, they've really kind of embraced home working. Mark Zuckerberg said that that's the future for workers at Facebook. Google have told their worldwide staff that they shouldn't be really returning to the office until July 2021. Some of the banking groups are doing that as well. The likes of Barclays, HSBC, Santander, even though some of their staff are working in some of the branches, because of course banks are open so people can collect money, they're still teasing it out, and they don't want their staff to return on a full-time basis until at least September. And there are a flurry of other corporate giants that are doing that as well, purely because the conversation here in Britain has changed. There was definitely a relaxing in the dialogue, but of course now we've got that second wave, if you can call it a second wave. Experts are saying it's the same wave, but it's just on the increase again. So because of that, I believe there is a little bit of caution, which of course is not great for the British economy, because it's the workers and the employees that are out buying coffees, buying food, dining out, and of course you're not going to be doing that if you're working from home in your kitchen.
All right, Juliana, let's talk about the earnings season, of course, which continues, and we've seen HSBC releasing a dismal result this morning. Is it just the financial downturn caused by COVID-19 that affected the UK's biggest bank, or is there more to this?
Well, there is more to this, Bissy, but it's mainly COVID, of course, and the credit impairments. We saw that last week. We had an array of big banks delivering their first half of the year results. HSBC have done it, and their shares are down by about 40% since COVID started, and their profits have plunged by 65%. So their profits are £3.2 billion in the first half of this year. This time last year, they had profits of 9.5 billion. So you can see the mass difference between the two of them. And really, it is about that credit impairment. There are so many schemes, world-leading schemes, I've got to say, with the Chancellor Rishi Sunak allowing employers to borrow money, not just with the self-employment scheme, which was a grant, but there are so many loans that are 100% backed by the government. And this is costing banks billions. One of the issues they have is that they know they're not going to get all of this money back. So HSBC have set aside a whopping £5.2 billion this year, and that's to cover bad debt. The difference between HSBC and a lot of other British banks is that they are an Asian-focused bank, and there's so much volatility at the moment in Hong Kong. That's really affecting their profits. Also, as well, there are different sanctions that are coming in, not just by America, but also by Britain, because of the national security law, which Beijing have imposed on Hong Kong. So at the moment, trading in that territory is not great. And the profitability of banks. We know that interest rates here in Britain are at a record low of 0.01%. And on top of that, the Bank of England did advise the big banks here in Britain a couple of months ago that they should scrap their dividends for shareholders so that they can, weather the storm when it comes to paying out these loans for people who are suffering from COVID-19. So there are different issues affecting the HSBC, which is why their shares were down at early trading.
Oh, it's a brand new week, Juliana. What is it looking like? What should we expect?
But it is a brand new week. Even though it's sunny here in Britain, it's the FTSE started off in negative territory, down by about 16 points. HSBC really is leading that sentiment there. It is Britain's biggest bank, so the fact that they've suffered so much during the first half of the year has affected traders. I've got to say, the second wave, or the first wave of COVID that's still looming around, is also worrying traders. And there is a little bit of good news. I've got to tell you that Eat Out to Help Out, I'm going to try and take advantage of that today, Bissy. So there's 50% off if you're dining in at a restaurant. There are about 70,000 restaurants here in the UK that are taking part of that scheme. It's a scheme that the Chancellor Rishi Sunak is hoping will save the jobs of about 1.5 million people, whether you're a chef or a waitress or a front of house staff working in a restaurant. people are not going to restaurants. The hospitality sector has suffered because consumer sentiment is so low at the moment. If you're on furlough and you're not sure you're going to be getting your job back once that scheme comes to an end in October, you're not really going to waste your money going outside to eat. The government know that, which is why they've put in this 50% off. So unless it's not for alcohol or beverages, but if you're eating in at a restaurant, it's going to be much lower. That's going to run from Mondays to Wednesdays throughout the month of August. It kicks off today. So the government will be hoping that they can reap the rewards of this and it will start getting the hospitality sector kicking again.
Well, please stay safe while you take that opportunity, Juliana. We'll see you again in the afternoon.
Thank you, Bissy.
It's back to Eddie now for a review of the debt and currencies market. Over to you.
Thanks, BC. At the fixed income market, the Treasury bond markets continued to trade with bullish sentiment last week as the healthy liquidity in the system sustained local participation and investors reinvested coupon payment. However, on Wednesday, the bond market reversed its bullish trend and ended the last session negative as average yields across the curve rose by 7 basis points. In all, yields declined by 20 basis points on average week on week. On Wednesday, we saw 60 deals worth 50.01 billion naira. The Nigerian Treasury bills market was really quiet last week as investors focused on the primary market auction on Wednesday. Wednesday was the only day we saw some activity in that space, and there were just 2 deals worth 180 million naira. Trading in the Omo bills market was bullish on the back of buoyant system liquidity. The average yield across the instruments contracted by 41 basis points. On Wednesday, there were 33 deals worth 134.76 billion naira. But to talk more about the fixed income market, let's bring in Ladi Bello, a fixed income dealer at Access Bank. Good morning, Ladi. Thank you for joining us on the program.
Good morning. Thank you for having me.
The bond market was quite bullish last week, except on Wednesday. So are those bullish sentiments likely to continue this week?
Yes, they are. For the most part, we've seen the bond market rally consistently since the preceding auction. We've seen most of the activity actually skewed towards the short to medium tenured maturities. There are a few coupon payments that were made last week, the preceding week as well, and we expect some more coupon payments as well as some other maturities coming into the system this week. So by and large, it will continue to be a bullish week given the heightened liquidity levels in the system, as well as the fact that market participants have kind of switched their interest from Treasury bills within the OMO space to the bond markets, given the more attractive yields there.
Okay, apart from the bond market, what's your overall outlook for the fixed income market this week?
Okay, so generally speaking, we've seen a downward trajectory in rates for the last couple of months within the NTB, the OMO, as well as the bond space. The maturities that are coming in the month of August, as well as July, the preceding month, were relatively thin. So we didn't see a lot of inflows or credits into the system. And as a result, simply means that the supply of these instruments have gone down significantly. So we've seen a general downward trajectory in yields across board. We're still seeing a bit of interest on the Nigerian Treasury bills, despite the relatively low levels. The 91, 182, and 364-day maturities are trading around 1.2, 1.5, and 3.4% respectively. So generally a large decline for where it's coming from this year. And we expect the downward trajectory to continue simply because there are limited investment outlets available in Nigeria at the moment, especially within the fixed income space. So as long as the supply continues to be few and far between, we're going to continue to see a decline in yield. But upon Q4, where we have a bit more maturities in the system towards the end of the year, we'll see a reversal in this trend.
All right, Ladi, thank you for coming on the program. Ladi Bello is a fixed income dealer at Access Bank. Well, it's been a long holiday, BC. We'll hope investors come back with their positive sentiments this week.
As always, we'll always hope for profitable trading day or profitable trading week. Of course, is the first trading week in the month of August. Thank you, Eddie. And that's our program today. Thank you for watching. I am BC Adebayo.